Welcome to the Stronghold Digital Mining Daily Update. Today is Wednesday, November 29th, 2023. I'm impressed by the fact that Stronghold Digital Mining stock is up above $4.50 a share. Looks like it closed at $4.54. Not bad. Pretty decent volume, nearly 400,000 shares traded. Not bad. So as of this moment right now, it's about 7 o'clock in the evening here in Pennsylvania. I'm looking at the price of Bitcoin at our Ziner.com, homemade Stronghold Digital Mining shareholder dashboard. I see that Bitcoin is just under $38,000 per coin. Intriguing. Even more intriguing is that hash prices are at about 7.5 cents. Now, why am I talking about hash prices at the moment? Well, a friend of our broadcasts, I believe she goes by, or he or she goes by the acronym Patty 007. And this is on Twitter, X. I mean, you call the company X, and yet the domain name that I have to type in to reach the site is twitter.com. So forgive me if I'm still a bit confused, Elon, but let's either call it Twitter or X. If we're going to call it X, great. Let's just get rid of Twitter altogether. Have it perhaps redirect to X somehow. Okay, Stephen, any thoughts on SDIG's profitability once we have the halving event for BTC next year? So my response was as follows. That's a phenomenal question, because it is, that I'm going to address today. And I'm doing that right now. In a nutshell, a lot will depend on where Bitcoin prices are by mid to late April, right, of 2024, as well as what the Bitcoin network hash rate happens to be. And to be fair, there are some other factors as well. So when we think about Stronghold Digital Mining profitability, let's, for the sake of some consistency, let's just say that, hey, what we're really referring to there is positive adjusted EBITDA, right? Hey, how is this going to affect our positive adjusted EBITDA? Well, right now, as I create this broadcast in very late November 2023, Stronghold Digital Mining is fighting, arguably, to attain some positive adjusted EBITDA for this year, right? 2023. So on the surface, you would say to yourself, well, gosh, if we're not even at some sort of positive adjusted EBITDA right now, what's this going to look like once we get into 2024 and we have the halving event? Okay. A couple of ways to look at this. First and foremost, bear in mind that at the very beginning of 2023, Stronghold Digital Mining was practically out of the Bitcoin mining game. And I don't mean that metaphorically. I mean that in a literal sense, that as part of a significant debt restructuring, an ingenious debt restructuring that really began in earnest in mid to late 2022, Stronghold Digital Mining returned, I think it was like over 26,000 Bitcoin mining machines, if memory serves me. I think it represented almost, not quite, but almost like 3 exahash. It was like 2.5 exahash of Bitcoin mining capacity. All those machines got returned to the lender, so to speak, right? So what that really meant was that we started this year with practically no Bitcoin mining hash rate whatsoever. Okay. The nice thing, however, is that we ended 2022 with a phenomenal blowout fourth quarter, largely driven by Winter Storm Elliott. What the hell does a winter storm have to do with Stronghold Digital Mining generating positive EBITDA, you might ask? Well, bear in mind that beyond just mining Bitcoin, Stronghold Digital Mining has the ability to use the electricity that it generates at its 2 wholly owned, right, mine waste to energy facilities, Scrubgrass in Western Pennsylvania, Panther Creek here in Eastern Pennsylvania. We can use that electricity and just sell it to the grid, right, to the local grid operator. And it's a win-win, right? It's a win not only for the grid, right? Because this electricity helps to stabilize the grid, especially in late 2022. The grid needed a lot of stabilization because it was at a point of, and I don't mean this to sound like hyperbole, this was like an actual fact. The grid was on the precipice of collapse. So Stronghold Digital Mining, being able to direct all of that electricity into the grid, helped the grid. There's no doubt about it. But it also really, really helped Stronghold Digital Mining. We were selling into the grid at prices that were astronomical, like, over $1,000 a megawatt hour. And we didn't do that for like 20 minutes. We did that for, like about a day and a half, more or less. And prices were elevated even for a little bit longer than that. So we got into 2023, grid prices then, kind of went back way, way lower. And we were left then with grid prices that for most of 2023 have not been much of a factor. Bitcoin, by contrast, well, I shouldn't even say by contrast just yet, all right? Because remember, we're right at the very beginning of 2023 in our story here. So here we are, the beginning of 2023, first quarter pretty much, let's say, we've got grid prices that are non-existent. We also have Bitcoin prices, specifically hash prices, that are still very, very anemic. Remember, Bitcoin, the price of Bitcoin, I think bottomed out at around, was it like $16,000 per coin, maybe $17,000 per coin in late 2022? Well, bear in mind, right? We didn't, right today we're almost at almost 40,000. Well, at the very beginning of the year, we weren't. Okay, the price of Bitcoin was still quite low. So what you really had was a situation where both of our main revenue inputs were kind of like non-existent. And hey, even if Bitcoin prices had been much better, remember, we didn't have the infrastructure really through which to mine for Bitcoin in earnest. So we found ourselves in a bit of a predicament. Despite that, we didn't do so badly. For Q1, Q2, even Q3, yeah, we didn't achieve positive adjusted EBITDA, but we were pretty much kind of in the hunt, almost at break even practically. Not, what I'm trying to get at, like it wasn't, these weren't blowout losses where it's like, oh my gosh, negative $20 million adjusted EBITDA, nothing like that. So when we think about profitability, right, when it comes to the halving, we have to bear in mind that we have only now slowly but surely begun to build up our Bitcoin mining infrastructure to the point where, yes, we do have, from what I understand, the ability to mine 4 exahash, right, of Bitcoin cumulatively between Scrubgrass and Panther Creek. Now, it sounds like we have run into some issue, it seems, as it relates to maybe plugging these machines in, having the uptime we want to have, stuff like that. But the good news is we have partnered with Frontier Mining. And from what it sounds like, based on our Q3 2023 investor presentation, specifically the Q&A section, it was mentioned that, in the 1 month since entering into, I believe, the master services agreement, right, MSA with Frontier Mining, don't quote me on that precise phraseology, but hey, basically in layman's terms, once we shook hands with Frontier Mining and said, hey guys, help us figure out like how to get our shit together here as it relates to Bitcoin mining. We want to make sure, we've invested tens upon tens of millions of dollars in these Bitcoin mining machines. We want to make sure that we're online all the time mining Bitcoin whenever we want to be mining Bitcoin. Hey, if grid prices, provide an opportunity to do something interesting there, great, we'll do that. But hey, if we want to be mining Bitcoin, we really want to be doing that. Not like, hey, the machines aren't quite working. Hey, we got to try to like reboot them or whatever the case may be. So the good news is it sounds like performance and uptime are increasing quite healthfully, so to speak, right? Since that agreement got put into place in October, based on what we learned in our Q3 2023 investor presentation, which took place about a month or so after Frontier Mining got into the picture. Okay. So as it relates to profitability, to circle back to how this little story got started, we really haven't had positive adjusted EBITDA yet in 2023. We ended 2022 for the whole year with positive adjusted EBITDA. I don't know, in other words, cash flow positive. I don't know that there are many, if any, other publicly traded Bitcoin mining companies that ended 2022 in positive territory as it relates to cash flow. We did. I'm cautiously optimistic that we have turned the corner sufficiently and that we're starting to see some revenue inputs that are increasingly getting more and more interesting, especially on the Bitcoin side of things, right? Throughout most of Q4 2024, Q4 2023, which is the fourth quarter, which is the quarter we're in right now, that I think this is going to be a far more interesting month insofar as like what the numbers look like. Right now, TETCO M3 natural gas prices are over $3. And the reason I'm sort of throwing in that random number is because, the zones of the grid that we operate in, right? The grid prices are very heavily influenced by natural gas prices. So the higher we see natural gas prices go, generally speaking, it's going to mean we're going to see some elevated grid prices. And the fact that we're getting into some colder weather, in fact, I'm looking here, I'm just scanning through the entire day today, looking at what some of our numbers look like. And, I'm no longer seeing situations where, grid prices are consistently like under $20 a megawatt hour. I'm seeing a lot of 30s, 40s, 90s, 50s, 118. Again, Bitcoin mining, by contrast, is still, I believe, more lucrative at this juncture, just given where hash prices are. But okay, so getting to next year, what happens? I mean, if we're already kind of struggling right now, how are things going to be any better next year? Well, my answer to that is that this year hasn't really been reflective, I think, of what our true potential is. We are going to be, I fully expect, to end this year, 2023, I keep thinking of, we're talking about next year, this year, last year. This year, I do expect that we will end the year at 4 exahash, not of capacity or, hey, let's keep it really simple, plugged in Bitcoin mining machines. We're actually mining for Bitcoin with 4 exahash of Bitcoin miners plugged in. I don't know how to make it more clear than that, right? That's my expectation. Not, hey, we've got all the equipment, but we're looking at it on a shelf, but it's more like, no. It's plugged in, it's running, and it's up. We solved the uptime issues. We're mining for Bitcoin. Now, if everything were to stay exactly the same, say the price of Bitcoin's 38,000, and let's say the network hash rate is, say, 450. That's about where it's at right now. And we've got then hash prices that are just over 7 cents, say about anywhere from 7.3 cents to maybe 7.5 cents. All of a sudden, you have the halving, okay? So that gets cut in, as the name implies, right? It gets cut in half, essentially. To keep it super simple, we could think of it as like essentially the hash price would get cut in half. So from, instead of, say 7.5 or so, we'd be looking more at roughly maybe 3.6 cents. Is my math right there? Yeah, about 3.6, 3.7 cents in terms of hash prices. Yeah, that's a sort of discouraging number, right? That's not exactly, that encouraging of a number to hear. Now, the good news is Stronghold Digital Mining can still generate revenue from selling up to 165 megawatts of electricity to the grid. That's right. Our capacity to produce electricity does not get cut in half. We're still going to be at 165 megawatts. That doesn't get cut in half. What's fascinating about the carbon capture initiative, specifically being listed on the Puro registry, is that we have the ability to potentially start seeing some incremental revenue come in as early as Q1 2024. Q1 ends at the end of March. Sometime in April, which will already be in Q2, we're likely to see the Bitcoin halving take place. Now, any revenue that's being generated from carbon capture is still not going to be like a tremendous amount of money. I mean, unless we really see that our field results are generating some interesting results, right? And we decide, hey, we're not going to screw around. We're gonna jump into this market at like we're going to get in there at a 90-degree angle. And hey, we're going to divest ourselves of the replacement value of our roughly 25 megawatts of end-to-end Bitcoin mining or data center infrastructure so that we could just have the capital in hand, and we're going to go all out building carboliths. It's like, hey, sign me up. Do you need volunteers? Well, let's build them as quickly as we can, right? In a situation like that, where a decision is made, hey, we're going to go all in on carbon capture, which I think we're going to one way or the other. I know we talked about, hey, we're going to slowly ramp up throughout 2024, but I'm telling you, man, if the results are amazing, it's like a narcotic effect. It's like, wow, we're generating cash flow from this. Wait, how much more cash flow can we generate? Positive cash flow? How long does it take to build a carbolith? Well, what do we got to do to make that happen faster? How can we accelerate the process? I'm telling you, it's going to be really, really exciting. And I think the push is going to be on to really try to get that stuff online like ASAP. But there is absolutely no doubt that, hey, if everything were the exact same way it is today at halving, Bitcoin mining revenue is going to take a huge, huge hit. And that's going to suck, and it's going to be problematic, not just for Stronghold Digital Mining, but I guarantee you for every single company in the publicly traded Bitcoin mining ecosystem. It's been said recently that hope is not a strategy. I hear you. Stronghold Digital Mining isn't hoping. I see this company proactively doing things to potentially generate more useful revenue that has nothing to do specifically with Bitcoin mining, right? Such as carbon capture, such as, hey, our ability to sell electricity into the grid, such as it was only touched upon during our carbon capture initiative presentation. But hey, instead of just taking that carbonated beneficial use hash and putting it back into the ground, well, what if that material could go into cement? What if it could become a supplementary cementitious material? That's yet another way to generate revenue. See where I'm going with this? So the bottom line answer is, yeah, if everything stays the same, it's gonna in terms of Bitcoin, right? The economics, $38,000 Bitcoin, a network hash rate that just flatlines at 450. Yeah, then you got hash prices about what 3.7 or so, let's say. Yeah, that's gonna be tricky. Okay, is it gonna be game over for Stronghold Digital Mining? I don't think so. I really don't think so. Is it gonna be tough? Yeah, it's gonna be tough. But it's going to be even worse for like every other company out there that all they can do, like literally all, it's like a one-trick pony, as they'd say. Hey, all we can do is plug a machine in and mine Bitcoin. And, man, I hope that the hash price is there, because I don't care if you get the most efficient Bitcoin mining machine on planet Earth today, and that's all you're using. 3 cent and change hash prices don't work. They just don't work. Okay. So this brings me then to what I think is likely to happen. I think it's likely that the price of Bitcoin will continue to go up. Okay. And I think it's entirely possible that the price of Bitcoin could be substantially higher than it is today at the time of the halving. We're at about 40,000 right now. Hey, what if we're at 60,000 by the time of the halving? So you could have a scenario where, without boring you with all the math, where, hey, even if hash prices, or rather, if the Bitcoin network hash rate stays about 450, maybe it moves up a little bit closer to 500 on a more consistent basis. If you get the price of Bitcoin to go up high enough, hash prices essentially kind of move up. And even though the halving takes place, hash prices themselves actually stay around, say, roughly the 7 cent range. Or higher. A lot depends on the price of Bitcoin. The higher the price of Bitcoin, if the network hash rate stays about the same, the higher hash prices go. If you have a scenario where a lot of older Bitcoin mining machines come offline, which I've read is being hypothesized by some in the know market observers, you might actually see a decrease potentially in the Bitcoin network hash rate after the halving. If Bitcoin, hey, what if Bitcoin's at, $60, $70, $80,000 by sometime next summer, and the network hash rate's at about 500, 550, I mean, hash prices are going to still look pretty good. And by then I would expect our carbon capture initiative to be like really potentially doing super well. And so you have to understand, like, the carbon capture stuff, it could sound a little bit like, man, wait, this sounds like science fiction. What are you doing? Like, beneficial use hash is going to suck carbon out of the air. Dude, I'll believe it when I see it. I'm with you. But I think we're going to see it. Okay. And I think we're going to see it not just as a fun science experiment where we get together for quarterly meetings and we're like, hey, let's get some progress on our latest science project. Where for fun, we're capturing carbon and doing all this fun, interesting stuff with our beneficial use hash. And hey, kids, check out how we're able to generate electricity and send it to the grid. No, beyond that cool stuff, I would hope and expect and demand, as I'm sure you would, that our company be able to produce copious amounts of positive adjusted EBITDA. So in summary, yeah, the halving is going to be a very uncertain event. I don't have a crystal ball. I don't think anybody does. But I'm telling you, I'm in Stronghold Digital Mining on a long-term basis. I'm very positive on this company's ability to not only survive the Bitcoin halving event, but to thrive through that event. So I will leave you with that. Until we speak again, let's stay positive, let's be great, and I'll see you again tomorrow.